The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the January 13th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. Who knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a magical Monday. Let's make sure that you and I, that we do everything we can to have an extraordinary Tuesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right, just that one little change in world, that one little shift will change everything in your world, because that means you can find the gift in every set of circumstances that life is going to throw at you. And I can promise you one thing, life is going to throw circumstances to you. It's just like the wind. You can't avoid it. All you got to do is learn to plant a good sail. Let the wind be at your back. I'm absolutely grateful for your presence here this morning, and I am here to serve you. It's as simple as that. All you've got to do is pick up that phone, give me a call at 877-927-6648. Then together, you and I, we can take a look at a chart. You can show me what you're looking at. I'll give you my eyes on that. Together, we'll come up with a good conclusion. Of course, internationally, you can also reach out to us at 727-445-1044. This is Terrific Tuesday. This is TFNN. Of course, I'm Steve Rhodes, a little blurry-eyed from staying up so late last night, or actually early this morning. Welcome to the show. Congratulations to the Ohio State Buckeyes. What a good game. I thought it was a good game. Watch it to the end there, even though you could, we got finally towards the end of that fourth quarter, and you could see that the game was basically over. But I wanted to watch the entire game. It's never over till it's over out there. And what a great day for sports. If you are a sports fan like I am, first, I love college football. Absolutely love college football. The NFL, it's a whole different story. The Super Bowl, yeah, but the rest of the game, during playoffs, I like them. But for the most part, not really much of an NFL guy. Different story when it comes to college football. And then, of course, yesterday, for those of you that are golfers, was that not a perfect day? We got the opportunity to turn on golf at about 4 o'clock. So take a look at it like this. Market closes, in essence, at 4, right? Forget about the futures market, but the market closes at 4. Then you can turn on the tube and you can watch 5 hours of golf from Kapalua over in Maui. Now, folks, if you're a golfer and you've never had a chance to go play the Plantation course, get that off your bucket list and go actually do it. Great course out there, great sights, especially this time of the year when you're in the whales aquarium out there, in between Molokai, Lanai, and Maui out there. And it's a great spot, one of the greatest spots on the planet, in my opinion. So how about that? You get to watch golf and then turn on the national championship game. I'd like to repeat that kind of a Monday again out there. In any event, we'll see. We'll see. Are the markets going to repeat their Monday? Well, we're just the opposite right now. We've got the Dow futures. They're up 138 points. They're trading out at 17,710. S&P futures up about 14 points, trading at 2,036. NASDAQ futures up 32, traded 4,200. That's after having the Dow off I don't remember how many points was it off yesterday, 100 points or so. The S&P was down 17. The NASDAQ composite off 39 points out there. Right now we got the King. He's on the move, up 35 pennies, 356 ticks, trading out at 92.54. We'll go check in on that. Goldilocks defying gravity out here. That's up $5. That's trading out at 12.83. Silver really defying gravity, having a nice morning of 51 cents. That's up 3%. Light sweet crude, well, she's in the dumpster out here, down 70 cents, 45.35. We're certainly going to take a look at that stock chart out here. Natural gas up about 8 cents right now. Quick peek across the globe. It must be October. Can't be January, because they're having a party over in Germany. Looks like Oktoberfest up 152 points. It was up big yesterday, up big again this morning, up 1.5%, trading out at 99.33. Do the folks in Germany, does the DAX know something that you and I don't know? You got the FTSE up 39 points. She's trading up 0.6%, trading out at 65.40. Over in Asia last night, a bit of a mixed bag. The Nikkei off 110 points, down 0.6%. It was to the upside, and the Hang Seng up 0.8%, up 189 points, closing out at 24,215. And the Shanghai pretty much unchanged, up just slightly, up 6 points out there. Again, our call number is 877-927-6648. All right, let's go get an idea. Futures-wise, let's start off with the daily futures contract. We'll get an idea as to where things are at. So right now you're trading at 2,037. Of course, we can go ahead and fast forward back to December 31st. And the close inside the futures contract out here was at 2,050. You're at 2,037. So you're down about 13 points as we speak. A lot of hubbubaloo for a lot of nothing as we speak right now. So this is just simply, this is the FSU chop, 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 or plop, plop, fizz, fizz. Oh, what a relief it is. This morning, we're getting a bit of a relief rally out there. Of course, we know yesterday, if you listen to the show out here, I can't recall whether it was during hour 1, hour 2, maybe it was during both hours out there. And what I said to you was if the market had closed right around there, that's when the market was down, and we saw the VIX index had more than a 10% one-day rate of change, to expect a bounce today. To expect a bounce. How's that for anticipation? How's that for going ahead and setting the hook out there? If we take a look at what's really going on in the markets, as I say, take a look at December 31st, where we're trading right now, down a bit to flat. If we take a look at the Dow, just go see where the Dow is trading at. December 31st inside the futures, Dow futures closing out at 17,752. You're at 17,710 as we speak right now. So not a whole lot of anything. Is this an A to B equals CD to the downside, or is this an A to B equals CD to the upside? I don't know. I don't know the answer to that. Sometimes there are time periods where it's just simply good to be neutral, because that's really what this whole chop is that's going on inside the markets. There's going to be a point in time where the market will point a direction. I believe that direction is to the north, but that direction doesn't have to come in here for a couple of weeks. Today is what, January 13th? Yeah, it does not have to come in for a couple of weeks. If we look at the, so what does that mean? So we're taking a look at the, go back to the ES Mini. What's my best estimate as to today? Well, the best estimate as to today is really simple. If you see the ES Mini close above 2,041.75, that's another 5 points, 6 points north of where we're at out here. Then that bodes well for the potential of actually an A to B equals CD to the upside out there. If in fact 2,041.75 acts as resistance, right now that's what I have to assume that it is. That's where we saw price really cascading yesterday, right at that open, right from the get-go at 9:30. We saw price start to get pummeled, big volume to the downside. We'll see if that is the way that the pattern plays out today. The expectation of a market bounce, as we discussed yesterday, that's been fulfilled at this stage. Is it a bottom? Is it a significant bottom? I don't think so. But the market's going to do what the market's going to do. It doesn't give a rat's, you know what I mean, whether or not I think that the market has bottomed or not. In the event of take a look at the NASDAQ just to get a feel for where we're at, December 31st on the futures contract, closing out at 4232.75. You're at about 4,200 right now. You're at 41.97. So we can see just not a whole lot of anything. I really expect the market to be doing this whipsaw action here for a while. So even, and that means if you're trading on the long and short side, you're playing these intraday intervals, and they're big, they're nice. What you've really got to do is go ahead and shorten your trades down to shorter term time frames, whether that's 15-minute, 30-minute, 10-minute, whatever time frame charts it is that you look at. In fact, if we go take a look at the 30-minute chart out here right now for the S&P futures, what we're going to see here, it's right now off of the, now yesterday as it was making that low, let me get my crosshair out here, making a low coming into the 4 p.m. close out there. We saw price moving lower with just slightly lower, with less relative weakness out there. In fact, that's a pattern we looked at in light sweet crude. We'll take a look at that here in a moment. So we saw a nice little bottom being put in here, so you figure go take a look at the call from yesterday during the 9 to 11 o'clock time frame, saying, hey, if the market ends up right here and we see the VIX index doing its typical magical routine out there, not so much magic once you know the hocus pocus dominocus out there. So once we saw that, then you say, hey, Stevie's saying, hey, the market's going to bounce if X happens. Well, which it has. Then you get this nice little price relative strength divergent pattern. You get a nice little bullish engulfing candle that occurs at 4 p.m. Now what we're at is we're into the fifth wave to the upside out here, out of maybe a total of 7 waves out there. It says that 2,041.75 is a significant level of resistance. We'll see if in fact that holds. That's on the ES Mini. Of course, if we switch on over, so hopefully I'm giving you an idea as to where price is basically heading today. You should expect a chop. You should expect a chop today, a chop tomorrow, a chop the next day. You should expect continued chops out there. Now, I'll say you get more than a chop. if in fact you close above that level that I just gave to you inside the ES Mini. Now, back to light sweet crude. Yesterday we were taking a look at this pattern here in light sweet crude, trying to identify, hey, is there a potential bottom that could be forming here? And what we took a look at, this is the chart that we're looking at. So if you're watching us on TigerTV, thanks so much for doing that. You may be listening to us over in on your radio. Could be your mobile device at TFNN.mobi. Let me describe to you what you're looking. Remember, you can get the archive of this show on Channel 9, but you can get the live stream right this very second by going to the homepage of TFNN.com. Upper right-hand side, you see a button, 3 little smartphone devices on it. Click on that. The show will stream live to you, and you'll be taking a look at my chart here for the February contract for light sweet crude. Now, what do we know about that? Yesterday, it was making a lower low, doing it with less relative weakness out there. Now, that pattern has shifted today as we saw light sweet crude make a lower low. The actual intra-session low that we've seen so far here is down at a price point of 44.20. So that pattern is, it's not so much that it's null and void, because if we did see price close above yesterday's open, 48.19, then you'd get a nice bullish reversal signal with that relative strength divergent pattern out here. That is not what it appears as is in play out here. We are in that 7th wave, 7th inning stretch out there, that 7th wave to the downside. The 7th inning stretch, just like in a baseball game where, you know, you got to get up and maybe you're gonna change your physiology. The market here, when it changes physiology, it can bounce in a different direction. So unless we see some type of bullish reversal candle today, I've seen this play out here a number of times when the market then all of a sudden regains its momentum for pushing lower, and that's really its message of the market. But we'll see how today plays out. Where it's the light sweet crude with regard to the bounce, it's not like it is a foregone conclusion now. Today's candle, though, is muy importante out there, so we'll take a look at that really tomorrow. You know, something happens intraday, we can take a look at it, but that was a daily chart that we're taking a look at. Now, of course, what you and I also know, let's assume that we don't see any kind of bullish reversal signal inside light sweet crude. And one of the patterns, one of those stretching that rubber band pattern here, one of those stretches is finally caught up to momentum to the downside. What that actually means is that we should see that lower price that you and I are looking for. That lower price, pretty easy to identify. We go take a look at the continuous contract here, and that's when we switch this over into, it's just going to be easier just to switch this over into the quarterly chart out here. As soon as we do that, and what we know is that is a move all the way back down to its lows out here at 33.20. Can it go lower? Yeah, of course it can go lower. But right now, what we do know is that price is below the 0.786 retracement that's coming off of the 2009 low down at the 33.20 mark. That's your significant swing point out here. That is all the way up to the highs that were put in April 2011. That was out at 114.83. Once you get below, and you came into the 0.786 level with a wide-ranging bar, obviously we're looking at a quarterly chart out here, but it does bode well for price getting down to about 33.20. That means really below 33.20. Maybe it's 33.19, something like that. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, Dow futures up 160. S&P is up 16. I mentioned yesterday being a great day. I love the golf. I love college football, of course. One of my best days in my life. Used to travel over to Japan all the time. I'm going to put up on my screen here. I'm going to show you my favorite spot, my favorite rock. Everybody should have a favorite spot. It's really this picture right here. It's actually, I use this as one of my screensavers, and I adorn my walls with this picture as well. It's just one of these spots that has a lot of meaning for me. Anyways, my best day is being over in Japan. Because of the time zone difference, you can be over in Japan, have a full day. So go play golf, go to a great sushi bar, I hop on the plane, usually leave Japan around 8:30 or so to head back towards the States. Of course, where I head back to is that spot right there, Lanai, Hawaii. If you've never been there, you got to put that on your bucket list. And, if you think the Plantation course is a great course over in Kapalua, wait till you go play the Challenge at Manili. That is an extraordinary golf course out there, and you should really make sure that is added to your bucket list. But the reason why it makes for such a great day is you have this full day over in Japan doing whatever it is that you like to do, and then you get on a plane. Red eye, you try to catch some sleep. You land in Honolulu. In order to get to Lanai, you got to land in of course, you got to land in Honolulu anyways. You got to get through customs, right? You land in Honolulu about 6 or so in the morning. You hop on one of the flights over to Lanai, a little excursion, boom. The next thing you know, you're on the golf course, and it's like about 8:30 again in the morning. You get to relive the entire day just simply because of the time zones out there. To me, that is a great day when you can relive that exact same day again, doing your favorite things out there. Now, let's see. We had a couple of number of requests out here. One request was from our man Z inside the den, and his question was, hey, if what's my best forecast idea for the next 50-point move inside of the S&P futures out here? What I have to say is I am, as I said earlier, I'm neutral at this stage. I don't think it's as simple as a call with regard to the next 50 points. I would say it's really not. Let's not complicate anything. It becomes this 2041.75 should be resistance. That should be resistance. I'm inclined to say the next 50-point move, or whatever that move is some type of move to the downside, some type of washout that's going to occur between now and the end of this month, and that's going to be setting the bottom. That's going to be setting a major bottom inside of the market for 2015. I am more apt with giving you that as my forecast, that the bottom, and that could be a higher bottom. So I am not discounting that the bottom that we saw most recently out here, that can't be, just come back to the ES Mini on the daily chart. So I'm not discounting that what we saw that took place out here. When was it? Let me put the ES Mini back up on my chart. Just a few days ago. Right back, well, let's see, this is December, so it's this one right here in January. The January 6th potentially could have been that bottom. But I do believe we're going to see one more. I don't think so, but it could be. I'm open to that. But I do believe we're going to see one more, at least one more flush down the tubes. I think we got some chopping going ahead here for a while, and then we get one more big washout. And it's going to be like a scary washout. Probably what happens is everybody on CNBC, Bloomberg, whatever other channels, they're talking about the end is here. They're going to talk about the first few days of the year and all the percentages and probabilities and what goes on. And the sky will be, I promise you, the sky will be falling. And so I would be more apt to say that becomes the next buy. And that bottom should be, and I believe will be, the major bottom in 2015, and then we have a fairly significant rally inside the markets. And up till when, we're going to see some moves higher, some moves and retracements. But this next bottom that comes in, that's the one that you should be anticipating. It's no different than anticipating, hey, yesterday with the markets doing what they're doing, saying, hey, we should expect a bounce in the market. Now, of course, we could expect that bounce for a number of factors, right? I mean, just take a look. We talked about this during the 10 o'clock show, when we were looking at what was going on inside of the ETF structure, specifically the Dow Diamonds. The Dow Diamonds were the one that were giving us kind of that biggest, at least, bounce signal out here. And what was that? We were taking a look at that swing point from January 6th, of course. The high out there was 175.54. There was 10 million shares that were done on that day. And yesterday, we saw price moving down into that level, got down to a low of 175.46. It rejected that, and it did it on 4 million shares. 4 million shares, did it on 40% of the volume to the downside. It's not like we're in a holiday or anything like that. So that is a total rejection of price. So now we're going to see the bounce as the diamond's going to move up to 180.38. I don't know the answer to that out there. When we get back, let's go take a look at things that are moving and grooving in the marketplace. You got pharmacyclics to the upside. The daily junior gold ETF, JNUG, that's moving to the upside as well. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 234, trade out at 17,875. I told you it was an early morning, late night out there. S&P up 23 points, trading out at 2,051. NASDAQ composite up 57 points. She's trading at 47.22. Russell 2000 up 11 points, trading at 11.90. DAX up about 200 points out there. Gold up $3 right now. Silver up 47 cents. Light sweet crude back 36 cents, trading out at 45.73. Lead the charge to the upside. We've got pharmacyclics up 20%, 19% up $22 out there. What did they do out here? Preliminary, preliminary 2014 U.S. net product revenue results, some revenue outlook. Google's up $6 this morning. Amazon up $6. You've got Goldman Sachs up $3. Baidu's up a couple of dollars to the downside. Channel Advisor Corp, ECOM, down 53%. What the heck's going on there? What do they do? They've just simply apparently they've cut their fourth quarter revenue and they're cut their stock in half by 50% here this morning. Juno Therapeutics down 4.5% off 270. The Fresh Market down 250, down 6% out there. Decent store, I would say. What do we see out here? Oh, the CEO has resigned. So that's impacting that stock. You've got Apartment Investment and Management Company. That's up 3.5% to the downside. Now, let me show you a cool stock chart. A question came in during the break. Will the major bottom in the S&P be where oil will also be? And that's a great question. I'm not going to be able to show that chart, at least during this break here. The chart I'm looking for I couldn't find, and I want to go back and rebuild that for you. But I will show you a cool chart out here for you to watch. So hopefully you watch this on Tiger TV. Here's something that maybe you know, maybe you don't know. The top portion of my chart, it's the continuous contract here for light sweet crude. So I've got 4 different quadrants that we're taking a look at. So the top portion, first quadrant, number 1 is light sweet crude. Second is the U.S. dollar, Canadian dollar, okay, U.S. Canadian, the loonie out there, the loonie bin, which I've been in the loonie bin. Shoot, I used to get the Canadian. I used to hate getting Canadian change. I had a paper route, the Detroit News, the Detroit Free Press when I was a kid, and I hated getting Canadian money out there. Nobody really liked it. In any event, if we take a look at the sidetrack there, the third panel in my chart is the Mexican peso. So that's the U.S. dollar against the Mexican peso out here. And then the fourth panel is actually the U.S. dollar index. Now, what's interesting here is that light sweet crude actually follows those currencies just as well as the U.S. dollar index. And that's just simply some of what I was pointing out. So for those that are really trying to call or an eventual bottom inside light sweet crude, since it's really all about the currency pairs, you could look to these currency pairs as well for some type of bottom formation. You can see the fall off. I'll pull this back. Maybe it explodes just a little bit more. You can see the directional correlation between these currency pairs as well. So to answer the question, with regard to, is it the bottom that we're going to see in January? Is that going to coincide with light sweet crude? Trade each chart separately. Because what I was trying to go back to and find, I've shared this with you before in the past, and I hear this on CNBC. It's like all the time that that the market can't move higher without light sweet crude moving higher, and that's all 100% BS. It is absolute BS. It is all before Steve out there, because when I go find that chart to rebuild it, whether it's today or tomorrow, we're going to find that there are absolutely plenty of periods of time where the S&P can move higher. They talk about that correlation being so direct. BS. It's not always that direct out there. And so trade each chart and trade the patterns on that as well. So in any event, here for those of you trying to call a bottom in light sweet crude, sorry about that. little dust ball, little fur ball out there. You just simply want to also take a look at what's going on inside the currency pairs out here. and really what you'd like to try to do is find some kind of divergence. And actually inside the Mexican currency pair, Mexican peso, right now, it's starting to show a little bit of a bottom out here. These are closes, by the way, when we take a look at the blue lines on my chart out here. So these are closes, not intraday highs or lows or anything like that, just simply closes out here. So that's so if you do try to trade that currency chart, or you try to trade that commodity, you really should be paying attention as to what's going on inside of the Canadian dollar as well as the Mexican peso out there. At least that's Stevie's suggestion for you. Now let's go take a look at some things here that are moving in the marketplace, other than the market itself. Let's go take a look at Pharmacyclics. That's the leader in the clubhouse, up a nice 18%, up $22 as we speak right now. So that is a huge gap to the upside. In fact, such a huge gap that it's taking out its highs back here from December the 8th. Those highs were 145.41. That had volume of 725,000 shares. Shoot, you've done 954,000 shares, and we've only been trading for 9 minutes or so out here. So that is a big move. So this thing is all the way back to its highs out here. I'm going to put this on a longer term. Looks like that is probably the all-time high back on February 21st out at 154.89. Let's just confirm that. I don't know if that is the all-time high or was that the 52-week high inside of this equity. Yeah, that was the all-time high. So now, as we take a look at the monthly chart out here, we can see that, that really is really resistance out here at the 154.89 level. So you haven't hit that yet. Looks like that's where price is headed to. If you get above that, that sets up a very large A to B equals CD to the upside. And that is ticker symbol PCYC. Most certainly has the volume here this morning. And so that says that it ought to go at least get to those highs out there. That's what it ought to do. We'll see what it actually does do. You've got ticker symbol IHS. That's up a nice 8%, up $9 this morning, $9 and change. They're out with their numbers. So we're now starting to get earnings that are rolling out. They had net income of 60 million versus 40. So they beat that by 50%. Not a 50, by about more like 50% out there is what they did. So that's a nice beat. Increase their net income by 50%. The revenue here, $2.3 billion, and I don't see what the prior year. Looks like I don't see what the prior year. Nonetheless, that thing has gapped up this morning. Let's go take a look at this again. Ticker symbol here is IHS. So as we take a look at IHS, trading out at 119. Let's go see where this thing has some problems. This is off of the bottom. Made a bottom, made a lower low with less relative weakness out there. So similar to the chart pattern that we were taking a look at. Volume today, 125,000 shares. I can't really get my system's a little slow here. I don't know why, but let me try to get to a weekly chart out here. It's slow because my system was keeping me company while I was watching the game last night. That's what it is. So it, too, is tired out here. So on a weekly chart, nice candle formation out here. We had an A to B equals CD to the downside. So it looks like this has completed and has confirmed out here. Let me see. Our A point out here was on the week that began September 1st. Your B point the week that began October. These are all 2013 dates. And then the C point the week began October 27th. Makes a 1-to-1 A to B equals CD to the downside on the weekly chart. Nice bullish engulfing as we speak. Right now, this thing ought to be targeting probably at least the 0.618 retracement level. That says that this equity ought to make a move up to about the 129.44. It's made in this 1 week here. It's made the 0.382 retracement area. No reason for it to not be moving to those levels. Let me go quickly peek in here on the ES Mini, 2047. So now you've got that price. Now this is a 30-minute chart, so you want to wait till 10 o'clock, but you're above that 2041.75 so far. We'll see if that actually acts as resistance. If not, then we see a move most certainly higher in the market. Of course, if I take a look at right now, let's go see what the VIX index is doing. Down by about 9%. So we're going to start getting to the negative 10%. We're going to start getting to that chop, fizz. Oh, what a relief it really is not out here. Let's continue going and taking a look at some of these equities that are moving. Let me go back to this other tab out here. No, we haven't looked at the gold and silver. We did look at light sweet crude, so it kind of gave you a feel as to what's going on there. We didn't look at the currency pairs. Back to Z's question about the move here in the markets. Never a good scene when the markets are moving higher, and this currency pair is saying, where the heck are you guys going? Where he's going to make that whistle sound and say, where the heck are you going? Now, inside of the Euro Japanese yen, you knew what I was talking about. What we can see here is on the daily chart, it's made the 1 to 1.618 A to B equals CD to the downside. We've been talking about that area, which was 139.49. The actual price low has been 139.35. We're not seeing any kind of bullish reversal signal here. It looks to me like this currency pair then wants to move down to the 137.58. That is in light of or short of any bulls actually showing up to the rodeo out here. And at this stage, there are no bulls in the rodeo. You get the market moving in this direction and this currency pair moving in that direction. That's not a good thing. That is not what the bulls want to see out there, and that is no bull. If we take a look at the euro, US dollar, it's trading a bit lower here this morning. We talked about how what the euro needed to do yesterday was just to give us, kind of like one tick higher, a close above the 117.91 level. Did it do that? No, it did not do that. Now we got the euro revisiting its lows out here. If we take a look at the euro, remember now the euro here, if we put this on the daily chart, it too, let me get rid of the couple things out here. Let me turn that off. There we go. So it too has made the 1 to 1.618 on its daily chart. A to B equals CD to the downside. The 1 to 2 level at the 115. Of course, what is more important is taking a look at the longer term chart out here. That is the weekly chart. That weekly chart, that says that the euro wants lower price out here. That says stronger US dollar index. I mean stronger all the way up to the 110 area, or down to the 110 area, I should say, inside of the euro. That is the message of it. So weekly chart, we haven't seen anything inside the daily chart to suggest otherwise. That said, says the U.S. dollar index will continue to get stronger out here unless we see some kind of bullish reversal signal. That is not in the cards as of yet. If we take a quick peek here at the Great British Pound out there, so look, if you're trading these markets, these are whipsaw markets out there, and so make sure you protect your profits. Look at that rate of change inside the VIX index before every close out there, and you can decide that you're in this choppy market and close out your longs and or shorts, depending on which side of the market that you had taken based upon what's going on out there. On the weekly chart out here, we can see that the Great British Pound, she has made the 1 to 1.272 level. That's a weekly chart that we are looking at. That was at the 1.507 area. Short of any kind of bulls showing up at the rodeo here, this says that it may want to get down to the 1.468 area as its next move to the downside. If we take a look at the daily chart inside of this currency pair, the daily chart on the daily basis made the 1 to 1.272. A to B equals CD. Now, this has a little bit more promise than the euro. It had a bullish engulfing candle on January 9th, just as the euro did, but yesterday it did manage to close higher. So this morning we've seen a move down to test those lows. So this actually looks like the Great British Pound is more likely in bounce territory as we speak right now. Even though the weekly shows lower price coming at us, but at this stage here, the Great British Pound could be bouncing out there. It actually looks like a hammer type candle on January 8th, bullish engulfing on January 9th. A little bit of additional higher close yesterday, rejection of the lows this morning. That all sounds like at least a bullish bounce inside of the Great British Pound. Let's take a look at some things here that are moving to the downside. We've got a Channel Advisor Corp, 54%. Let's go see what that thing is moving back into. So that is quite a haircut. Quite an island, by the way, that it has formed out here. But let's forget about the island. Let's just go try to figure out where this thing may be headed to. We're going to put this on a monthly chart out here. Go see what it might be attacking. Ugh. This is ugly. Nothing worse than putting something on a monthly chart like this and seeing that everybody basically is in the red on this equity. It's traded 957. The low is 903. So you got a few people that somebody made 47 cents on this stock as we speak. That is Channel Advisor Corp. That is just one ugly chart out there. No reason to spend any time there because nobody inside the TFNN community has got that equity in their holding in their portfolio out there. So that's good news. Let's take a look at Altisource. That portfolio, ASPS, down 22% this morning. I don't see any earnings behind its news out here, but let's go take a look at what this is doing. This looks also downright ugly and horrible. Trading out at 2075. It's been in a decided downtrend ever since the December 2013 timeframe, at least December 2013, maybe even longer than that. Let's put this on a weekly chart. Yeah, the highs out here were back in December 2013. It's on its way down to about the $6.29 area. That'll take you all the way back below its original IPO back in the 2009 timeframe, August of 2009. Looks like the IPO, this is a monthly, weekly chart we're looking at, range was $5.60 to $18. So it's going to head to at least the $18 mark, more likely $6.29. ASPS is the ticker symbol there. Let's take a look at, I mentioned gold and silver, so let's go look at Goldilocks and silver. You've got gold right now trading out at 1235. What we know about gold here is we know that gold, was this the weekly chart? Yeah, let's put this on a daily chart for you. If we take a look at Goldilocks on the daily chart, let me pull this back. So what gold has done here this morning, it's tested its swing point high, its potential, well, its B point of an A to B equals C to the upside, if and when it can take out the 1239 area. 1239 is the high from December the 9th out there. Looks like volume around 107, maybe 240,000 contracts so far today. 138,000 contracts. We'll see if it can close above. If it closes above 1239, then you're likely looking at a move up to about the 1303. 1274 is your 1-to-1, and 1303 1 to 1.272. A to B equals CD. This is Steve Rhodes. This is TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 261, S&P up 25, Composite up 73, Russell's up 15 points. I did find that chart that I was looking for, so this way I can come back and answer that question that came in during the, not the last break, but the break before. Now, this chart here that we're looking at The top portion of the chart is the S&P futures. Now, it's a monthly chart that we're looking at here for all three time frames. So you've got the S&P futures on a monthly basis. That way, we're going back into the 2002 time frame. So we got plenty of data to take a look at. The center portion of my screen, the green line that you're looking at, that is light sweet crude on a monthly chart. And the blue line here is the U.S. dollar index. This way, you can kind of see correlations inside of the marketplace. Now, when it comes to light sweet crude, the blue line at the bottom, or the center line out here versus the blue line U.S. dollar index, I would have to say that the correlation, the directional correlation that exists inside the market is more so between these two than it is what everybody on CNBC is talking about with regard to it being the S&P. I mean, it's just kind of like I sometimes want to pull my hair out, and that's tough, you know, because you're talking about a guy that continues to have a receding forehead. Yeah, I got a lot of hair still for my age, but, you know, there's this receding forehead every time I take a look at a younger picture, and I'm like, ooh, that's kind of interesting out there. So I don't pull my hair out. I just simply say, what the? I say BS. It's all before Steve. So let's take a look at it. You got the just as an example here, if we take a look, we come back here in the time frame between 2007, September 2007 to June of 2008, we saw light sweet crude move much higher. Much higher out there, right? And if you take a look at the direction of the ES Mini, the S&P 500, in essence, which way was it going? To the downside. So if you bought into the malarkey that the people are trying to push on the news media, that in fact, you know, it is a correlation that, you know, when that correlation doesn't exist, look the heck out. You know, what the heck are they actually looking at out here? Well, what they're not doing is they're not really going back very far. They're just kind of using their own sample size to tell their own story out here. I mean, for goodness sakes, take a look at lights. We take a look at the S&P or the ES Mini, as I say, and you go back to the 2010 timeframe, October of 2010. Significant bottom, as we know, in basically almost every October of the year out here. The S&P makes a significant bottom out here, and of course, take a look at where it's trading at. That's the purple line. That's the aqua line that is on my Aquaman, fuchsia, whatever color it might be on your screen out here. It's not aqua. It's got to be purple. Aqua's blue. So it's the purple line. It's the fuchsia line that's on my screen. So take a look at that move versus what do we see inside light sweet crude for this period of time, going back to 2011 through basically what was October 2014. We saw a sideways move. We saw a consolidation move inside of light sweet crude. Did we see a consolidation inside the S&P? I mean, come on. We didn't see any kind of consolidation inside the S&P. So light sweet crude, with regard to where it moves in the U.S. dollar, you're better off taking a look at the correlation I gave to you earlier, which is the U.S. dollar index and or the Canadian dollar and the Mexican peso out there. Those currency pairs, with regard to the direction of what goes on inside of the market, is way better than the malarkey that people are selling you in these channels. Or go ahead and have them call into the show and tell me what it is that we're taking a look at that we're not seeing out here. Because I don't know, I'm looking at the same thing you are, and I don't see that. I do see the correlation with the U.S. dollar index and light sweet crude. That I see. And we saw the correlation with regard to the Mexican peso and the Canadian dollar. But with regard to the S&P 500, are you nuts? Anyways, hey folks, stay tuned, because hour 2 of the Trader's Edge is up next, and we'll try to add some humor, some jest. Right now, we got the Dow is up 270 points, the S&P is up 26. If you're off to start your Tuesday, have a terrific day. As always, thanks so much for joining us here. We appreciate it very much. Look forward to seeing you soon. Take care, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.